to our WTS transfer pricing webinar that will be focused today on management fees. My name is Anne-Laure Goetzinger. I am a transfer pricing partner at FIDAL, which is the biggest tax law firm in France, and the French member of the WTS Global network. Maybe we can go to the slide, Verena?
Yes.
With a presentation of a series, the series of the free webinars. Okay, move on to the next slide. Okay, thank you very much. So as you can see on this slide, our meeting of today is the second of a series of free webinars. The first one on April was focused on transfer pricing issues regarding specifically mid-sized business. And the 26th of June, in a third webinar, we will address the matter of hard to value intangible with a special focus on the new regulations and especially in France. Lastly, I wanted to inform you, but maybe you know it, that we will have our WTS Global Week in Paris at the beginning of October. And during this week, many workshops on various tax matters will be organized, and you are all, of course, welcome to this great event. As for today, we choose the subject of tax audit. Everyone is always curious to know the last developments in the field of tax audit. And we have all noted that the practices of the tax authorities in Europe, in Asia, in the US, have recently changed during the recent period. This is why in this second webinar, we wanted to offer you a multi-country view on the major trends in that matter, based on the experience of tax experts located in different countries. So today, 3 of TP experts, Gilles for France, Giovanni for Italy, and sorry for India, will explain their local specificity in that matter, and give you a specific focus on the 5 topics that you can see on this slide. So let's start with France. Gilles, we have the floor. What about the recent practices of the French tax authorities that have a reputation for adopting quite aggressive position in tax audits?
Okay, thank you very much, Anne-Laure. So I am Gilles Vincent Dulaurier. I'm partner in FIDAL in transfer pricing and in international tax. And so this is a very classic debate, management fees, all debates in terms of transfer pricing, but in fact, this continues to be a very big goal of tax audit. So we guess that it was fine to have a kind of focus on this, but the title was, as explained, from a quantitative approach to a qualitative approach. Why is this title? Because in fact, we see that until to now and in the past, we have a lot of information to provide to the tax administrations. And now we can see that, perhaps we have come back. Sorry for the slide, it was just before. Yes, okay. And now we see that we have more and more questions about the fact that if we need to pay for something or not, whatever the justification for that. So this was the title of this webinar. So we will see 5 topics about that. So far, the content is as follows. First of all, we will start by the beginning, audit trail and cost recharge. Second thing, we will see how the tax administration see the possibility offers by EU joint TP forum or OECD guideline in order to have a kind of 5% or 3 to 10% markup for what they call the low value-added services. After that, in the third topic, we will see how the tax, what is the approaches of the tax administration regarding the high value services, for instance, IT or actuarial services. Something if we can see if sometime we can consider that we have a very high value added services, if this could be considered as a kind of IP and not a services. And last thing, it was one of the goal of this debate to see is whatever the justification of the costs should a third party would accept to pay for some services. So this is the last point of our debate. This is this kind of qualitative approach and the new approach of tax administration, which are now more focused on qualitative elements rather than quantitative element, even if quantitative elements continue to be a big challenge. So perhaps the first slide. So we will see each time for each country how will be the approach of tax administration. So next slide, perhaps. So for France, so I begin by France for the first topic, audit trail and cost recharge. So this was when I started in transfer pricing a long time ago now. Each time we have to justify the costs and how these costs are allocated and recharged to a country. So that means tax administration are focusing on the audit trail of the cost recharge with a classical debate about what are the shareholder costs, non-shareholder costs, which are direct costs, indirect costs, what should be the good allocation key or not, if we can have a kind of bundle of markup or if we have to need a kind of markup for each kind of services, and also, of course, the level of the markup applied. So at the beginning, during the first tax audit for transfer pricing, sometimes the taxpayer has some issue with the burden of the proof because they have not so much detailed data and financial data. But now we can see they have more and more, a lot of data, they have good audit trail. So it's more difficult now for the tax administration to tackle this kind of financial data. So this is what we can see right now. The taxpayer are more and more comfortable with their audit trail. But this is the case in France. But now we can see what is the position of India, and after that, the position of Italy.
Yeah, thanks, Vincent. Now coming to the India position on the management fee charge, besides what I would just touch up 3-4 points because a couple of points have already been covered by Vincent. What is important is that from the perspective of a taxpayer in India, they are supposed to have an agreement and the copy of the invoice as a primary document to justify that there is a charge of management fee. And then very often the tax department, if there is a service provider is maintaining timesheets of the employees whose cost is charged to India, even that is also asked as an evidence in support of the documentation. Plus, if there are various cost heads, suppose say for example, the cost could be IT, HR, legal, you require a breakup of the cost for each of the cost heads. Basis that, then the cost allocation criteria, reasonableness, and the markup. So generally, to best option of practice, what we adopt is that a certificate we obtain from the statutory auditors of the service provider overseas, and that covers all the aspects which are covered out here, and hence becomes a good document to substantiate and furnish in the course of the tax assessment or tax audit. I think this covers point number 1, Vincent. I'll request Giovanni to cover on the Italian part.
We don't hear you, Giovanni.
Good afternoon. Giovanni Rolle, a partner at WTS R&A Studio Tributario, the Italian member firm of WTS Global. Very grateful for this opportunity to discuss with my colleagues, as it always happens on cases during this webinar. Now, it's difficult to find in Italy a real trend in real development in those audits concerning management fees. What clearly we can say is that always management fees are inspected and challenged. So it's important to keep in mind what are the three key factors which on a case-by-case basis become the controversial point. We follow as a country quite closely the OECD guidelines, at least for the first 2 points, which are adherence and effectiveness. So the evidence that the service has actually been provided and that it has generated value for the recipient. And we will come to this later, discussing one further topic ahead in this webinar. But what is clearly the most frequent controversial point is documentation. So documentation means contracts, means evidence of interaction between the service provider and the service recipient, and a number of other things. We have been successful recently, I mean, as a community of companies and advisors, to overcome the idea that each single item of expense should be documented. There was a very famous case concerning an airline in which the tax authorities claimed to receive every single item of expense as a documentation, but this has been replaced by the acceptance of the overall report of the expenses, maybe better certified by an auditor, and maybe we can come back to this again. One final point, which has been controversial recently, is the discussion, is the point as to whether there should be or not a markup. There was a very old official instruction dating back to 1980, according to which intra-group services could or should, it's not so clear, have been charged at pure cost without markup. So when the Italian company of the group is providing the service, it was generally accepted that no markup could be applied. But this has, I think, been definitively overcome. And so today, this exception, which was somehow allowed by the tax authorities, is no longer applicable. Back to Gilles, I guess.
Okay, thank you, Giovanni. And so we will go to the second topic. Regarding if we need to have some benchmark exercise, or if we can use the possibilities offered by, first of all, OECD, and after that by the EU Joint TP Forum, because effectively, in order to ease the work of the taxpayer, now we have the possibility to use some range. This is in the case of the EU TP Forum, from 3 to 10%. We can consider that if we are within this kind of range, we can avoid to perform a benchmark. And from the OECD guideline, so we have an approach with only one figure, it's 5%, not more, where if we consider that we are performing low value added services, we can use this figure, this markup, without performing any benchmark exercise. So it's good from a cost perspective. So it's a good news for that. Now, what is this kind of low value services? Because in fact, okay, effectively we can use some possibility in order to use some markup and avoid any benchmark. What is low value added services? I am saying that because now we can see more and more low value added services. So first of all, what we have to take into consideration, within the same kind of services, for instance, legal services, we have exactly the same principle in the US also. We can have what they call also for low value added services, the same principle as the US. Within the same kind of services, for instance, so legal services, we have to split between some services which can be considered as low value added services, compliance, for instance, and perhaps high value added services for legal M&A or position on tax, something like that. So we have not to take into consideration by main kind of services, but within a specific kind of services, we have to split and to check for each item if we consider this is a low value added services or not a low value added services. I am saying that because sometimes we see taxpayers say, okay, 5% for legal. No, it's not 5% for legal. Within the legal, we should detail. Sometimes this is not necessary because we can consider that we perform some very classical services, low value added services, so we can use legal at 5%. But the reality, and in case of a tax audit, tax administration, notably in France, we will see the position of the other tax administration, could check within a kind of services if we need to have different level of markup. Last thing also, I want to focus on this kind of topic. What is low value added services? So all these kind of low value added services are detailed in chapter 7.45 of OECD guideline and following section. So if we can go to the next slide. Okay, you have some example from the OECD guideline of low value added services. And so we can see that these low value added services are really done for management services. That means services coming from the holding to the subsidiaries or branches. But sometimes I can see that in TP documentation that they use some this kind of possibility of OECD or from the EU Joint TP Forum to use low value added services from specific services. This is not possible. You can see that you cannot use these low value added services for R&D services, for key services of a company, for sales, for financial transaction. You cannot use this kind of possibility. So just to keep in mind that the low value added services is for management services, not for manufacturing or production, even if this is a very low value added production, low value added manufacturing activity, you should not use this kind of possibility offered by OECD or EU Joint TP Forum. So this is what we can see in France, but I let my Italian colleague, first of all, my Indian colleague continue.
In continuation to what Vincent said just now on what is qualifying as a markup for the low value added services, wanted to bring out the point that there are two different aspects, I think, which is very important to look at from India perspective. One is when I'm receiving the services from the overseas party and when I'm providing the services. Now, as regards the receipt of services, what from the safe harbor, the Indian tax authorities have come out with a safe harbor rule, which says that a markup of up to 5% is allowed, provided the value of the intra-group service is less than 1.12 million euros. And obviously, there are conditions attached to that. If you want to avail that facility of going ahead with the safe harbor, a certificate from the accountant, which has to mention everything about the cost pooling, excluding the shareholder and duplicative cost, and the reasonableness of the allocation key. Now, besides that, what is important is that OECD defines what is low value added services, and it states that what gets excluded, like what Vincent said some time back, the services in the nature of R&D, manufacturing, sales, financial transactions are excluded. In the Indian context, under the safe harbor law, they have added 3 more categories of services which need to be excluded from the safe harbor. And those are primarily information technology services, knowledge process outsourcing services, that is called KPO, and BPO, business process outsourcing. So in a way, the Indian government or the tax department says, if you are availing KPO, BPO and IT services from overseas, that will not qualify as a low value added services. What it means is that, and from the Indian perspective, if you look at it, Indian companies have been providing these services to the overseas market. Hence, when it comes to the provision of low value added services from the Indian perspective, which is covered in point number 2, the concept of markup under the OECD of 5% does not apply for provision of services. And that is one of the reasons why the Indian government is saying that we don't consider these 3 categories of service to qualify as low value added services. Okay, over to, I think, Giovanni.
Thank you. It's interesting to hear that the distinction between low added value services and other services has been adopted in many countries. And this is also true for Italy. The definition is that one which Gilles has illustrated from the OECD guidelines, and I don't think it's needed to comment that any further. What is crucial, however, in the Italian case, is that the new documentation requirements adopted in Italy in 2020 with effect from the documentation first drafted in 2021, so 3 years ago, has drawn a very sharp distinction between the 2 categories in terms of which documentation has to be prepared. So this qualification as a low added value service, or so to say a mainstream service, has to be defined well in advance of preparing the documentation, because the documentation requirements are very much different. So it is not something that can be, so to say, easily adapted, or anyway, it requires an additional analysis. So it's crucial in Italy to have the documentation at the center of this distinction and follow closely the documentation instructions. The consequence of this is that the EU Joint Transfer Pricing Forum range, which was reasonable, flexible, and widely adopted before 2020, is no longer recognized, and so no longer recommended as a way to benchmark the margins on services in this country.
Okay, good to know. So thank you, Giovanni. So I will continue with the third item. So it was with the fact that if should the service rendered with a markup higher than 10% could be considered as a kind of royalty transaction or IP. So first of all, I just want to specify that we have not specific case law about that. At least in France, we can see that with the other countries. But this question is coming from our experience with our client. And so sometimes we are mapping and we assist our client in order to perform their local TP documentation or master file. And so sometimes they have some transaction with very high markup. When I say high markup, is more than 10% usually. And so we can have discussion about the fact to say with the client, but this is really services, or you can consider this is perhaps that more services, which could be perhaps shaped as a kind of IP services, but taking into consideration after that we could have some withholding tax issue, because when you are under services, usually under tax treaty, you have no withholding tax. If you are coming in an IP rate, you will have, depending on tax treaty, some potential withholding tax. But so when you are mapping some flows for a company at the beginning, when you are performing their TP documentation, each time you have a kind of services with more than 10%, this is possible, of course. You have perhaps draw your attention. You should draw your attention about that, and to perhaps to see if we have not another manner, another room of manner, in order perhaps to shape this kind of transaction, and perhaps consider this is perhaps an IP transaction. From a transfer pricing perspective, it's perhaps very clear for you, but when you are working with other people within your company, in their mind, this is perhaps not in their mind in this kind of possibility. They are not thinking about this kind of possibility. I am saying that because each time that you have more than 20%, so bear in mind, okay, is it really services rendered, or is it a kind of IP? So we have no specific case law about that in France. I'm saying that, but it was just in order to open the debate about this issue. But I let my other colleague have their position on and feedback about this item.
Coming to what Vincent just now said, from the Indian perspective, when an Indian company is availing a service, I mean, this issue about whether it is in the nature of royalty is never there. And perhaps I think it is not there primarily because from the Indian perspective, when you remit money towards this availment of services, either it is fees for technical or, as Vincent said, it could be qualifying as royalty. But from the tax withholding perspective, whether it is royalty or fees for technical services, under the domestic law, invariably there will be a tax withholding, or you may claim a treaty benefit, and the rate of withholding could be something like 10% or 15%, depending upon the treaty country. So perhaps maybe from the OECD perspective, when it is the cost and a markup of a small percentage, the OECD recommends that only on the markup there should be a withholding. And hence, perhaps from the India perspective, it doesn't really matter whether it is the fees for technical or royalty, because from the India perspective, they would withhold the taxes at the rate of 10 or 15%. Yeah, over to Giovanni.
Yes, thank you, Sudhir. The Indian perspective is very interesting because indeed the treaty between India and Italy, for example, does not draw a distinction between royalty and technical services. They are treated in the same way, at least when the recipient is in India and the fee is paid to an Italian company. It wouldn't work vice versa because we don't have in Italy a domestic withholding tax on services. So that part of the India-Italy treaty would never apply when Italy is paying out management service to an Indian company. But anyway, the issue of the qualification of a service as a royalty is not unknown to the Italian system. We have a few cases which I think would be interesting to look at as a paradigm of what might happen. I should point out that those reconstructions do not depend on the amount of the markup, but rather on some intrinsic feature of the service. And I have two examples. One derives from a regional tax court decision of quite a while ago, which really is still very important for our thoughts today. The case was the case of a foreign company delivering management services to an Italian company, and the tax authorities claimed that since those services required a significant know-how on the side of the service provider, that those services could be requalified as a license of such know-how. Now, of course, clearly, many services require know-how on the side of the provider, but one thing is to deliver advisory service or service more in general, another is to purely license the know-how for the use of the recipient. And this distinction was clearly recognized by the tax court, which has dismissed the claim of the tax authority. However, I think that this case still remains important because it indicates that at least the tax authorities might try to do so, might try to reconstruct a service into a a license agreement, know-how license agreement. The second case, very briefly, in the next slide, is an example of a, so to say, sales-related service, which was delivered by a Dutch company to an Italian company. And since that marketing service, which was named merchandising, although the name was not very appropriate in the circumstances, but anyway, that service so to say, had an implicit component, which was the license of the brand. So it was requalified in part as a brand license, and that qualification was indeed accepted by the Italian Supreme Court. And I think that this was not wrong, because this was more a case of a mixed agreement than the case of a service agreement, which was requalified. So to sum it up, we should never underestimate the risk that part of a service can be requalified as a license to some extent. Thank you. Back to Gilles, I think.
Okay, thank you, Giovanni. So we go now to the fourth item. So just to have a clear distinction, the third item was what should be the borderline between high value added services and IP. It was the third item. The fourth item now is just for high markup services. So it's not a question of borderline if this is an IP or not. Just how is the approach of tax administration when they receive some, when a local entity receives some services with a very high markup. And so the question is, at this stage is not to know if this could be considered or requalified as an IP, but just to know how is the approach of tax administration. So we can see that notably for actuarial services, for IT services. So this is usual case that we can see. For instance, in France, I have the case when we receive some IT services from Indian companies. So you have the holding in India and so a sub in France. I can see sometimes IT services rendered with a 15% markup. So I have the case. And so usually now French tax administration is aware about the fact that usually Indian holding recharge with high markup. So this is now more easily to defend because they are aware about that. They don't try to requalify that as an IP, that's clear. But the question was to know if they accept to such a very high markup. No issue in France because this is IT services, and we can consider that you have in R&D, in financial services, in medical transactions, sometimes R&D medical transaction, you can have very high markup in this kind of services. So now if you have an appropriate benchmark, and so you can justify your position, you can defend your position. But I have the case where effectively when you have some recharge of costs from India, you have high markup, and so now you have to defend your position in France. But to be honest now, I don't see more difficulties in France. So you have usual difficulties, but I don't see more difficulties now. So I'm aware that sometimes you have very high value-added services which need to have a markup which are higher than 10%. But effectively, I had the case with India, and notably for IT services. I let you, Shadir, perhaps to comment, because effectively now India is a very big IT service provider for a lot of countries.
I understand. In fact, we had discussed this, Vincent, earlier also. So from the Indian context, what I had already covered in the earlier point number 2 was that low value added services does not cover IT services, KPO and BPO. In continuation of that, what the tax officials in India, the general approach is, they said that from the perspective of the management services, they would consider this as a separate transaction, and markup per se is not that important, because generally if you look at from the charge which the Indian company gets from the overseas parent, the markup is somewhere in the range of 5 to 10%, but that is not that much contested. and we had cases where we had defended up to 10% markup, which had come from a Singapore-based company on a regional headquarter charge that was accepted from the transfer pricing perspective. However, the larger question from the tax authorities in India is that they consider management charge as a separate transaction as against the taxpayer's approach to adopt a transactional net margin method, whereby what the taxpayers in India do is that all transactions for purchases, sales, rendition of services, availment of services, everything is bundled together. Look at the operating margin which you are earning and benchmark that margin vis-a-vis the comparable companies. And if your margins are, even after paying this management fee, quite higher, that is the way the taxpayer is benchmarking the transaction, which invariably the tax department has been questioning. And if I tell you something, about 10 years back, there were cases where the management fee was allowed by the tax tribunal. I'm talking about the appellate authority, on some percentage, depending upon the degree of evidence. They have allowed, I have a couple of cases where I have argued to say that 50% of the management fee paid was allowed as a deduction. But as and when the time passed, the tax appellate authorities were questioning whether that 50% is on what basis. So of late, what we are seeing in the tax audits are that either they allow you or they disallow 100%. There is no midway process, and only when you reach the level of the appellate authorities, you get some relief in terms of getting a justification for allowance of this. And at the appellate level, invariably the TNM, that is TNM method, is adopted if my margins are better as compared to the comparable companies. But what we have seen is that the tax department always have been saying that you produce CUP to justify this sort of a charge, and which in all practical purposes is difficult to have a CUP because the Indian company doesn't avail this service from third parties, so it's ruled out. Over to you, Giovanni.
Yes, thank you, Sudhir. I can't but underwrite the first point of your slide. The tax authorities hardly ever challenge the markup. Usually, the primary focus is on the cost basis, on the cost apportionment, on the documentation of cost rather than the markup. And there is no limitation, there is no guideline, there is no case law essentially on the markup. So the general rule applies, under which any markup is in principle acceptable, provided that it is supported by function, asset, and risk analysis, and of course, a consistent benchmarking analysis. And then, of course, the factors you can read from the slides, but the crucial point is that the documentation of the markup also is essential. And if the services really belongs to a category in which there is a traditionally high market profit, then that is also accepted in an infra-group context. Thank you, and back to Gilles.
Okay, thank you, Giovanni. So now, last but not the least, we'll go to the last item. What we consider to be now the new approach and the new grade. I mentioned the new grade of tax administration. And so now to have perhaps a qualitative approach rather than a quantitative approach. Why I'm saying that? Because now taxpayers are more and more prepared in case of challenge during a tax audit. They have justification, very detailed Excel matrix, where you have a very detailed explanation about the shareholder cost, non-shareholder costs, very detailed explanation about the allocation key per kind of services or global allocation key. So they have now a lot of tools in order to defend their position. And so you have also a lot of service provider, IT service provider of software, which can split everything. And so you have now a very detailed explanation about something. So it's more difficult now for the tax administration to challenge all this kind of audit trail. It was the case at the beginning, but now it's more difficult for them. So the new issue for them is perhaps to say, okay, do you need these services? So two possibilities for them to tackle that. They can consider that you have duplicate services. So to say that you receive some, for instance, accounting services, but you have your own accounting department locally. So this is a kind of duplicate services, and you have not to pay for that. First kind of angle of attack, but second angle of attack, they can say, no, but I consider that this kind of services is not necessary for you. You don't need these services. So it's a very strong angle of attack. But sometimes we can see that now because they know that if they come back to the audit trail, now the taxpayer can defend his position. Not always, but usually they are now more comfortable with that. It's very difficult to defend an attack based on what I qualify as a qualitative approach because you have no data, you have no financial figures, it's not objective. You have to convince based on fact, perhaps based also on agreement or convention, but it's more difficult to defend your position when you have this kind of new attack of a tax administration. So it was the title of today's webinar, and so I let perhaps have the position of the other my other colleagues.
Thanks, Vincent. Now, coming to the last point on the benefit test, what we have seen in the course of this litigation, in fact, this litigation is going on for the last 15 years on management fee, and the matters have also reached the High Court. Perhaps some matters may reach the Supreme Court. So the 5-6 point what I have just jotted down, one is the tax department is asking as to whether you require these services and whether is it necessary to get it from overseas or you could have got it from India. That is first question. And then on the rendition of services or availment of services, what are the documentary evidences you would substantiate, and also whether you got the benefit of that. And generally what we have seen is that the documentation, it could be in the form of email exchanges for say IT, HR services. Then they also sometimes ask for the timesheets. If at all there is a charge from the overseas, for a service availed, timesheets, reports, or there is a third party service which has been availed by the overseas parent and charged to all the group companies. That also could be a good evidence. And if you remember earlier, I had mentioned about the point number 1 about the certificate. So if you get a certificate from the statutory auditor, and if he mentions in that saying that certain costs which are in the form of shareholder or duplicative have been excluded, that also lends a lot of credibility to the charge which has come to India. And onus is definitely on the taxpayer to justify with the documentary evidence. One of the other aspects which is very important is that when a service is availed, the main question which the tax officers ask for is the number of employees which are employed by the overseas service provider vis-a-vis the number of employees in India. What are the qualifications of the employees in India and overseas, and whether there is any duplication and why there is a need for the service. And when we adopt a TNMM method for benchmarking the transaction, invariably management fee as a percentage of the total turnover is also a factor which is taken into account. And this I am telling you because based on my discussions with the APA authorities, where if you file an APA, if you have good documentary evidences, they have also been kind enough to look at this part and say that if they are satisfied that there is a rendition of service and that management fee charge which is there, it is just for the purpose of discussion, assuming it is 5% of the turnover and your profits are say 15%. Assume for a moment, and 5% you are paying out of that. So 10% is the taxable profit. Sometimes they are reasonable enough to consider this and say that, okay, as long as the Indian company is paying taxes and availing services subject to the documentation and the justification, perhaps this expenditure can be allowed. So I think it's more a factual aspect, and hence what is important is that we have to be in a position to say that the management fee services availed. It is necessary for me to carry on my business in India, and without that service, it would be difficult to carry on. As long as you can demonstrate that to a larger extent, I think allowance becomes an easier thing. Giovanni, over to you.
Thank you. Let me say one thing on the top of the technical comments. I have realized, and I may reveal here a small secret, that when we have to address complex cases, French case law and Indian case law, from an Italian perspective, are very often a precious source of inspiration for tax practitioners. Because of the similarities of the system, especially in transfer pricing, and because of the sharp ideas which are developed in case law. And I think this is also true for a very sophisticated topic as the local benefit test. Now, of course, we have in Italy, we rely heavily on the OECD guidelines also on this point. So we especially look at the recipient perspective as well as at the provider perspective, something which is also supported by the EU Joint Transfer Pricing Forum guidelines, which in that part are still a reliable and authoritative reference. So we should look at the perspectives of both parties. But what I think can be a relevant difference, and we have discussed this for some time with Gilles in the past, is that I think we tend to have in Italy a more objective approach to the test. For objective approach, I mean that the benefit to be investigated is the potential economic benefit for the service recipient. So, which is different from the actual economic subjective benefit received in that particular case. For example, if there is a charge by a group company of group advertising expenses, the subjective approach would look at the actual benefits retrieved by the service recipient from that particular advertising campaign, which can be a very tricky demonstration, honestly, almost impossible demonstrations in many cases. While the objective approach is more focused on the question as to whether advertising in itself with those particular features is potentially suitable to generate benefits for the recipient. And this latter is the demonstration that we typically give, successfully, I would say, because it is quite clear that the tax authorities cannot investigate on the effects of a decision, of a business decision, but rather on the potential effects of it. So, just as in the case of India, of course, those interests which are clearly in the interest of the shareholders do not meet the benefit test. And also, and this is a very frequent approach of the Italian tax authorities, the duplicate test. Services are considered not to deliver a benefit when they duplicate services which are internally generated by the company receiving the service. So finally, if those two are met, so if the service goes successfully through those two gateways, then the benefit test is to be run objectively, as in the meaning that I have mentioned already. And this is, I think, all on this topic as far as Italy is concerned. And the floor back to Gilles, I think.
Oh, so thank you, Giovanni. Good to know that perhaps Italian tax authority will be more objective. Just one information, you have, for instance, this is in another country, but you have a very recent case law, BlackRock case law in the UK. It was regarding some shareholder loan. And so the issue at the end was not to the justification of the interest rate, but the UK judge come into the agreement and to see the covenant and to know if a third party would accept this kind of covenant or not. So it was more or less something a little bit different. It was in the UK, but same thing. The question was not the justification of an interest rate, but to see if a third party would accept to sign such kind of agreement. It's a very recent case law in the UK regarding BlackRock. So we see that you have now a trend of tax authorities perhaps who are to be more focused on the behavior of taxpayer. And I'm not saying this is a good thing, because behavior is something very subjective. But we see that right now, so we have to be cautious about that with this new trend of tax administrations. Perhaps, so at this stage, this was, so thank you for everybody to listen to us. I hope this was a good presentation of what are the recent case law and expectation of local tax administration, and perhaps I'll let Anne-Laure for the conclusion.
Yes, thank you, Gilles. Thank you to everyone for your attention. Of course, if you have any question, feel free to contact our TP experts. They are always happy to share their expertise. So do not hesitate to ask your question if you have any question. Just maybe one thing, our third TP webinar, the last one before the summer period, will be on June the 26th at 5 p.m. and not at noon. Our US TP expert will attend this meeting. And as I told you before, the matter will be the hard to value intangibles. So I hope many people will attend this last and third last webinar before the summer. Save the date. We will be happy to share our expertise on that matter. I see some question, but maybe it's the end, so we will answer the question by email. Have a nice afternoon. Goodbye to everyone, and thank you to all of you.